Given that the cost of college seems to be increasing every time you turn around, and paying for your children's higher education is one of the largest expenses you'll ever have in your lifetime, how can you be smart about paying for it? Today, my colleague Christian DiRusso and I will outline one very savvy educational funding strategy, the 529 plan. Also, be sure to watch till the end of this video, as we'll be going over a great way to front load your 529 plan contributions to maximize their growth over time. Hi everybody, and welcome to Wealth Matters for Physicians by Altfest Personal Wealth Management, the channel that provides key investing and personal financial planning insights to help physicians achieve their key life goals. Before I bring in Christian, a few words about Altfest. For nearly 40 years, Altfest Personal Wealth Management has been helping physicians holistically optimize all areas of their personal financial lives in a fully objective, no commissions manner, while as a legal fiduciary, always putting our physicians' best interests first. As physicians, you'll probably also want to know that Altfest is the preferred wealth manager for members of the Medical Society of the State of New York and the preferred wealth management education provider for both the New York chapter of the American College of Surgeons and the New York State Society of Orthopedic Surgeons, just to name a few of our association partners. As I mentioned, we are very happy today to have on the channel Christian DiRusso. Christian is a certified financial planner, a CPA, and a financial planning specialist at Altfest Personal Wealth Management, where he helps clients all the time optimize all areas of their personal financial planning and investment lives. Christian, thank you very much for being with us today on Wealth Matters for Physicians.
Thanks for having me.
Our pleasure. Well, let's get right into it. To start off talking about college educational funding, let's talk about the cost of college. How much does college cost now and maybe 18 years from now when a baby is off to it?
Yep. So currently, an in-state public school is costing about $11,000 per year. A private school, on the other hand, is costing about $38,000 per year, and that is currently in 2022 dollars. You'll see some private schools even go up to $60,000 per year, which is definitely a drastic difference from the in-state public school costs. But 18 years from now, colleges are increasing about 5% to 7% per year in terms of their tuition cost.
Wow.
So an in-state public school can cost up to $107,000 18 years from now, assuming you have a newborn that'll enter college on their 18th birthday after high school.
Is that for the 4 years?
For the 4 years, tuition only.
Wow.
So not including room and board.
Amazing.
Yep. And for a private school, that can go anywhere up to $570,000.
Wow. Over $500,000.
Yeah,
Amazing.
Over $500,000. And I mean, the cost disparity between the in-state public school and private schools is pretty large. Some would argue that it's worth it. So it's really up to a lot of your preference and then a lot of what you kind of choose to specifically major in.
Thank you very much. So Christian, let's talk about 529 plans. So first of all, just briefly, what are they and why are they so popular?
So a 529 plan is an account that you can invest for your child's education in. They're state-run accounts, and largely the reason that we choose to invest in them and recommend them to a lot of our clients is due to the tax trifecta, which is what we like to call it. The first one being the tax-deductible contributions. In New York, for example, $5,000 for a single taxpayer, or $10,000 for a married filing jointly couple can be deducted from your state income taxes.
Wow, great.
Which is a great benefit that, on addition to saving for your child's education. The second is tax-free withdrawals. So when you go to use the expense or the funds in your 529 account, you're able to withdraw those tax-free. And the last one is the tax-free growth that you get from all of your investments in the 529 account. You don't have to pay any dividends, interest, capital gains while it's invested, and can grow over the lifetime of your child as it leads up to college.
That sounds great. And when you take the money out, it's tax-free if you use it for qualified higher educational expenses, right?
Yes, exactly. So qualified expenses like tuition and fees, any books, even some technology like computers. And if you're a more than half-time student, room and board does count as well.
Excellent, excellent. So Christian, what are some of the other pros and cons of 529 plan?
So if your child doesn't need all of the funds that you've allocated in the 529 plan, you could actually transfer the beneficiary of the plan to, let's say, another child or even a nephew or niece, even yourself, if you need it.
Right.
You can also, after the passage of the Secure Act in January 2020, you could also use 529 assets for part of student loan repayments, which is great too.
Wow, that's very new. That's interesting.
Yeah, and aside from covering just four-year higher educational institutions, now it also covers apprenticeships as well.
Excellent. Any cons?
Yeah, some of the cons. The main one is really that your investment options may be limited to what is available within your state's 529 plan. You don't necessarily have all of the options that you would have in, let's say, a brokerage account or something along those lines.
Thank you. So, Christian, how do 529 plans, how are they factored into financial aid calculations for college?
So unlike a lot of other accounts, the 529 plan actually counts towards the parent's assets and not the child. So it will have a relatively limited impact on your child's financial aid eligibility.
Excellent. So, Christian, how much can you contribute per year into a 529 plan?
There is actually no contribution limit on 529 plans. Any contributions actually do count as a federal gift, and you currently do have a gift tax exemption of $16,000 per year per individual, or $32,000 per year per married couple, which is largely what people use to contribute to the 529 plan.
Great. And is there a way to kind of front load more if you wanted to, front load more contributions earlier on into a 529 plan? Is there any way to do that?
Yeah, so the IRS actually lets us do exactly that. So we're allowed to contribute 5 years worth of contributions all in one lump sum amount. And for a married couple, that would be about $160,000 in one single contribution, which is really great.
Wow. So what's, for our physician audience, they probably have a general idea of why this is good, but why is this a good thing to front load up to $160,000 right at the beginning?
So putting all that money in at once does allow the assets more time to grow. And again, they're growing tax-free. So that is a big benefit, and you can really get a lot of extra kind of investment growth from putting all of that in rather than once every 5 years. Or
Great.
Once per year every 5 years.
Great. So you're getting tax-free growth, you're getting more compounding probably earlier in the child's life, you're putting it more aggressively so they're being able to grow more aggressively, more money growing more aggressively over time in the early years.
Exactly.
Sounds like a great way to supercharge your 529.
Yep. Then the main con really being that you are locking up that big lump sum, the $160,000, for use in only educational expenses. But for the most part, you're generally going to use that and do want to contribute as much as possible, as early as possible, to really get the benefits of this growth.
Sounds excellent. Well, thank you very much, Christian, for being on the show today. You've given our physician audience some really great things to think about.
Thanks so much for having me.
If you'd like to discuss the information explained in today's video, receive a complimentary analysis of your investment portfolio or retirement readiness, or discuss any of your other personal financial planning areas with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732 or by emailing Jesse at his email address, which is also in the description of today's video below. If you like today's video about providing insights to help physicians optimize their personal finances and achieve financial independence, please click the subscribe button and hit the bell icon below to receive notifications each time we receive a new video. If you think that a fellow physician would find this video interesting or useful, please share it with him or her to help them also get their finances optimized. Lastly, as always, this channel is for you, and we want to make it as useful and as enjoyable as possible. If you have topics you'd like us to cover, like or dislike certain things that we're doing, or have any other feedback, we'd love to hear from you, so please share your comments in the comments section below. Well, that's all for today, physicians. Thank you very much for watching today's video, and I look forward to being with you in our next one. Until then, be well, and remember to keep on optimizing your finances, or let us help you if you'd like.